for business people.
Good afternoon and welcome to Bloomberg Quint, the headlines. Markets pick up momentum as both benchmark indices trade with strong gains led by drug makers. Broader markets in line, India VIX declines. Three drug makers, including Cadila, Glenmark and Torrent Pharma, come out with their earnings today. Crude trades at its lowest level in 2 months after US stockpiles hit an all-time high. And it has been a stellar debut for Galaxy Surfactants as the detergent maker lists at a premium of 40 rupees to its issue price of 1480 rupees per share. Those are your top headlines. I am Agam Akil. Up next is Hot Money with Darshan Mehta.
Thank you, Agam. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then, independent market expert Shahina Mukadam and Avinash Gorakshakar of Joindre Capital join us on the show. Thank you to both the guests for joining me on the show. Today on Hot Money, we'll discuss stocks like Voltas, Fortis Health Castrol and an investment bet post the correction that has happened. Let's start with the first stock, and that is Voltas. Now, the company came out with extremely strong set of numbers. The revenues were up 16%, profit up almost 23%, and margins at close to 8.6% versus 7.5% last time around. The stock is pretty much flat in today's trade, but what should one do with the counter going ahead? Is the fourth quarter going to be a dampener, or probably in the weakest quarter also Voltas can do much better? So we'll ask our guest Avinash, what's your view on Voltas? What should one do now?
No, I think Darshan, clearly if you see the overall top line growth and the bottom line growth, very strong numbers. And I think what was encouraging is that after the GST quarter, I think the cooling product business actually on a YOY business actually showed a very strong growth, almost 28 to 30%. And I think this definitely is very positive, from the shareholder as well as, from the company point of view. In fact, the company is also now looking at introducing some new products with a new JV, and obviously that is going to actually increase their market share. In fact, in the room air conditioning business, they have a market share of 23-25%, and we believe that players like LG who have exited the segment, plus Videocon who's on a weaker wicket, could ensure that this market share could actually expand in the coming quarters. So overall, I would believe that yes, coming year is going to be a challenging year. In fact, the fourth quarter may be a slight dampener, but we are looking at an earnings of close to about 20 rupees plus for FY19. And despite the fact that the stock has run up quite significantly and valuations are not cheap, I would believe that this can be a good positional hold for the next, say, 12 to 18 months. In the near term, it may not move up quite significantly, but the headwinds definitely seem to be quite positive, and we are positive on the stock.
Okay, so segmentally, unitary cooling is the one where they get in the maximum revenues. That's doing well, and that's also what's getting them the numbers, because it was up 32%. Yeah. But historically, there was concern as far as their heavy engineering and mechanical business was concerned, as well as the engineering business. Yeah. Are those concerns overdone, or will again unitary is doing well? Will those segments also start contributing now?
See, I think the project business is definitely something which we'll have to keep a watch at least for the next couple of quarters. And you're right. I think that is one business which has been a drag and which has not grown that commendably. So obviously, FY19 one would have to keep a close watch. But my sense is even in that business, looking at the kind of order book and hopefully margin improvement, I think there could be a good kind of improvement possibly in the next couple of quarters. So clearly the cooling business is going to be the key driver, and followed by that the engineering and obviously the project business, which actually could give a better kind of feel to the overall EBITDA kind of growth.
Okay, so it's a positive view that's coming in on Voltas by Avinash. Shahina, do you share the same view on Voltas, or you have a different view?
No, I definitely share the same view on Voltas. I think the numbers were very good. And to go back to the engineering product business, which really has suffered in terms of overall growth compared to the other two divisions, like the cooling and the electromagnetic. But I think here the return on the capital employed and the EBITDA on that side of the business, though it is smaller, is pretty high. Okay. So as this business also recovers in terms of growth, I think the contribution to the bottom line should be much faster. And I believe that overall, despite difficult conditions, both in the export market as well as domestic, the company has reported good numbers. So I think going forward, while valuations again are on the higher side compared to, I mean, it's just about all companies in that particular consumer durable segment, which is enjoying premium valuations as of now. But I think it will continue, and the growth going forward will justify that. So I would also agree with Avinash that one should, if you're holding the stock, continue holding for better numbers and better returns going forward.
Okay, but what about he spoke about the other businesses contributing. Is there any concern about any kind of slowdown in their main unitary cooling business, given the fact that it will be a lean quarter now and competition is definitely kicking in?
I think the management has indicated that they would be able to continue to show the sort of growth that they have shown in the last, I would say in the last 9 months. So I wouldn't look at it as a overtly a big concern, especially given that in this quarter also we didn't have any festivals. The festival season was over in the second quarter.
Okay.
So to that extent, I think what fourth quarter is slightly in terms of dampener in the other two segments. I think cooling should do well. So I don't see any problem coming in from that segment.
Okay, so it's a consensus bullish view that's coming in on Voltas post the numbers. The stock is trading absolutely flat in today's trade. It's up almost just 1 rupee. So, but overall on a year-on-year basis, been a marked outperformer. Let's talk about the second stock, and it's Fortis Healthcare. It's been all over the place from highs of about 200 rupees. It's corrected to almost double digit. Now it's trading at almost 120 rupees. It's not done well for the last 9 months. If you're looking at it, it's down almost 40%. And it's not the business, it's stuff that's outside the business that is affecting the stock. But what should one do with Fortis, given the fact that the corrections has come in very steep? Is there still value in Fortis Healthcare despite all the outside noise? We'll ask our guest, Shahina. The business is separate, but the promoter noise is actually weighing in significantly on the stock. On a fundamental basis, does Fortis deserve an investment by someone?
See, I have been holding, my family's been holding the stock for some time, and it's been a stark underperformer in the overall market if you're holding the stock even for a 2-year period, 3-year period. So to that extent, at least especially given the current, sharp decline that we've seen in the stock price. And I totally agree with you, it's more on the external factors rather than company actual performance, where if you see the balance sheet of the company, it is improving. So I would advise investors to continue holding. With the repayment of debt, if you actually see, the debt equity has improved considerably from when the company used to have a debt of almost more than 2 times. It's now it's hardly any debt left on the company books. And also the recent issues in terms of the court ruling against the promoters. I think it's more promoter driven or promoter related, does not exactly or does not really have any direct impact on the company balance sheet and company numbers. So to that extent, I think the company is protected. Also, if you see in terms of I think EBITDA margins, with the increase in capacity, they've got close to 5,000 beds. I remain positive on the overall pure business of the company, and going forward, as these issues settle, I see the M&A activity really the opportunity exists for the business, given the government's thrust also on health insurance, given the thrust on improving or increasing the capacity in hospitals through the overall mergers and acquisitions. So I think all these things are going to be positive, and I would suggest that the company is going through a lot of pain, but I continue holding, and I think that at current levels that's pointless in getting out of the stock. So one needs to continue holding, and you just have 2 stocks in this space. So and valuations of Fortis vis-a-vis
but now
the
you
second
have many.
stock.
You have Nadana, you have HCG, and you have
In the larger ones, in terms of larger capacity, yeah, you have a lot of smaller ones, but again in terms of valuation, I think Fortis is very competitive compared to the others. So yeah. So I would continue suggesting a hold, but there are a lot of negatives, and one really has to stay with the company to see a decent return, to see that 180, 200 type of levels back again.
Okay, so that's the view that's coming in on Fortis. It's more of a hold given the fact that the stock has corrected. Before I go to Avinash, Cadla's numbers are out and it looks pretty decent at this point of time. Revenues at 3260 crores versus our estimate of 3151 crores. Obviously, it has to be the big generic Lialda which they launched, which they have the full quarter impact on. Stock is up almost 5%. As far as the profit is concerned, 543. It's in line. I don't have the EBITDA numbers with me to give an indication of what the margins are, but on the face of it, it looks decent. Avinash, you want to come in on Cadla if you track it, the numbers?
No, I think definitely, at least on the bottom line number, I think what the street was expecting, I think that is exactly in line. I think on the operating level, one would like to see whether there has been a marked improvement, but I think overall there seem to be no negative surprises.
Yeah,
in fact,
it's at 841 crores. Our estimate was 836. So I think operationally they have done in line. So it's an inline set of performance as per the numbers that have come out. The other income seems to be lower this time. Stock reacting. I think among the pharma companies, it's one of the only companies that's showing decent growth at this point of time. Okay, so Cadla inline set of numbers is something that we can see from here. But Avinash, coming to you on Fortis Healthcare, what did you make of it?
No, I think net there's definitely a lot of value in the company, provided investors are willing to take the short-term pain which is outside the company. SRL diagnostic is going to be the key trigger. My sense is, if you compare it to other companies like Dr. Path Labs or maybe a Thyrocare, this business is definitely going to be extremely valuable once it gets listed separately. And more importantly, as Shahina was mentioning, they have a bed capacity of roughly close to 4,400 beds, and there is definitely scope to do a lot of asset sweating and increasing capacity utilization there. Within the hospital space, I think if one were to take a 2 to 3 year call and I think really bet on this business as a whole, I would not mind taking a short-term hit on my investment, provided a new management comes in, which is quite obvious now considering the kind of developments which has happened. So I think this is not a stock which can go purely on fundamentals, but once this event unfolds, like the new promoters come in and we do get a hint that the SRL diagnostic demerger is going to happen, you could see a significant re-rating purely on these reasons.
Okay, so that's the view that's coming in on Fortis Healthcare. It's more now become a wait and a watch, and at this price of time, it doesn't seem like a bad investment according to our guest. Let's move on to the next stock, and that is Castrol India. Extremely strong set of numbers. If you're looking at the top line growth of 24%, bottom line growth of 26%, margins at 32%, and a very strong volume growth of 16% was seen on the counter. Company has extremely strong return ratios. What should one do with Castrol? We'll ask our guest. You go first, Avinash. What did you make of the numbers? It's been a marked underperformer if you look at all parameters.
I think numbers have definitely been good. In fact, I think you rightly mentioned that volume growth which was missing for a long time has now got back, and I think for a stock like Castrol, considering the kind of debt-free balance sheet, cash on the books, plus very strong return ratios, this company is perceived by the markets as an FMCG company, and that's probably the reason these kind of premium valuations will continue. The management commentary has been quite solid. They have been mentioning that they are confident of taking on the kind of increase in crude and lube prices, which obviously has a short-term impact on their margins. But overall, if you see the next, say, 2 years, hopefully, if crude prices are kept under control, they have decent pricing power and the kind of positioning of their products. So I would definitely, look at this company as a kind of a portfolio pick. Maybe in the near term, we may not get a very big upside, but looking at the kind of business dynamics and their product positioning, especially in the premium categories, this is definitely a stock which can be held on for the next, say, couple of years.
I think there are only a couple of players which play in this field. So there's Castrol, I think there's Gulf Oil, and there is Tide Oil.
Yeah, Tide Oil.
Any view on the pecking order which would look better in the three
I think
of them
in the pecking order, I think second to it would be Gulf Oil, because it's increasing market share quite aggressively, and we don't cover Tide water, so we would be difficult to give you a call there. But I think within this space, it's a very closely guarded kind of market share kind of participation. So I would believe that Castrol definitely deserves a premium within the overall place.
Okay, that's the view that's coming in on Castrol. Shahina, Castrol, does it deserve the premium valuation, and what do you make? No doubt it's an expensive stock in terms of its peer capacity, but the return ratios are good, the numbers are good. what would you pay such a valuation for a stock like Castrol?
Yeah, I think I would. Given the fact that if you see the current scenario, almost 50% of the lubricant market comes from the CV segment. Okay. And we are seeing after, number of years, after 2 years at least, or 1-2 years, we're seeing the whole CV market picking up. Okay. We're seeing that reflected in the numbers. If you see other numbers of other CV companies, volumes are very strong. So I think that is going to positively reflect on Castrol's numbers going forward. So just considering that it is a big player in that particular segment. And I think the strategy of the company that we've seen in the last 1 year, which is actually improving the overall performance on a YOY basis, is basically their focus on brands and pushing their brands and increasing their distribution network. I think they've done that pretty aggressively, and I think that is what is going to contribute to the growth and better performance going forward. I think being a MNC company, I would suggest that investors remain invested and can add at every dip. Okay,
just a word on crude impact on Castrol, because crude is it's corrected over the past few days, but it's still trading at new highs. If you take for the past, what's happened? How will crude impact, rising crude impact Castrol?
Yeah, I think the management is comfortable with crude at between $55 to $60, and any variation on either side, I think the company can pass on, as most of the companies do, because of brand-driven business. So to that extent, we are likely to see some volatility in the price, but as they have shown, they have been able to pass on the increased costs as and when they happen. So to that extent, there will be a volatility in their selling prices, but I think they are pretty comfortable, and that will affect actually the retail prices, but to an extent not on the company margins.
Okay, Avinash, a word on crude on Castrol, the impact?
No, I think crude prices beyond a particular level, Darshan, would obviously impact the margins. In fact, I had already mentioned to you in my note, that this is definitely going to be a short-term pain point. But, considering the kind of pricing which the company enjoys vis-a-vis its competitors, they do enjoy a premium pricing, and to a large extent, hopefully if crude prices remain under control, then I'm quite sure that, their base, raw material comes in from crude oil, so that could basically be taken care of. But yes, beyond a particular level, say around $75 plus, it could obviously impact their margins.
Okay, so that's the view that's coming in on Castrol. Again, a double thumbs up that's coming in on Castrol. But before we move on, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, the big correction that happened in the market over the past few days gives excellent buying opportunities to some long-term, good quality stocks which can be held in your portfolio. So some of them have fallen. The mid caps have fallen anywhere between 30 to 40%. Some of the large caps have fallen 10 to 15%. So we'll ask our guest what is a good stock that they could recommend for our viewers, so that in this crash could be a good portfolio investment, or probably if they like it could even give more returns. So Shahina, you like Havells in the correction. Obviously Havells has corrected significantly. What's your rationale for Havells?
Well, if you see, they are reporting decent set of numbers already, and this is despite their switchgear business, which is seeing some bit of impact because it is largely construction related. So I think despite that pain area, the other segments, like you have their lighting and electrical goods segment, which is doing very well, and also in terms of their latest acquisition that they have done from Lloyd's, I think their cooling business, which is like fans and then now ACs, because of the increased product portfolio, I think this is going to contribute to the growth. Okay. Because I think the acquisition was done largely through internal accruals. The balance sheet is very strong, so there is minimal amount of additional debt that is going to come on the balance sheet, and despite this being quite a large acquisition and addition to the top line. So I believe that going forward, the business is going to be robust with bigger product portfolio, and I think the company, if they are able to sustain their EBITDA margins despite increasing costs of raw materials, they should do pretty well. I have added the stock to my portfolio some time back, and I think it's a stock worth adding at declines, which it has come off a bit, and with a medium to long term holding, it's going to be a decent stock to hold in the portfolio for the longer term.
Are you comfortable with the valuation? It's not one of the cheapest stock. It has its premium valuation in the consumer durable space at least. a word on the valuations of Havells?
Yeah, the valuations are premium, but I think with a 30% type of growth expectation CAGR over the next 2-3 years, I think compared to the rest of the pack in the consumer durables, that I think makes it fair valuation. I wouldn't say it's cheap at all, but none of the other stocks in the segment are. And given the fact that you have certain segments of the business where they contribute, like construction, there the opportunity is big. We're all talking about it. Like, you know, I mean, but as of now the segment is not doing well. So there is a opportunity for that delta to happen.
Okay.
So to that extent, I think as the volumes pick up, it would reflect on the bottom line. So I think the valuations are factoring that in.
Okay, you just said that you have, as a disclosure, you own the
Yes.
stock. It's at 515. Any potential target that you see on Havells at, let's say, a 2-year or 3-year perspective? What can someone look at for a Havells perspective?
I usually look at multi-baggers over a 5-year period, and I think it's going to be a multi-bagger.
Okay.
So I would, I mean, for a shorter term, 1 year, I would say 650. But I would say if you're holding on for the longer term, the acquisition has still to kick in terms of numbers. So one really needs to be patient, hold on to the stock, and it's got a strong brand, and which is going to leverage, you know, with a lot of new nice products in the AC, and you have their own core business also, which is likely to pick up. So I would hold it for the long term, 3 to 5 years, and see a multi-bagger.
Okay, so it's a multi-bagger stock that Shahina believes at least a 3 to 5 year holding is necessary for the counter because the brand name is there and valuation no doubt a premium. But the growth, she picks growth over valuation at this point of time for Havells. And Avinash, you like Jain Irrigation. It's moved up very fast, and the correction has also been very swift on Jain Irrigation. So what makes you positive on Jain Irrigation?
No, I think within the micro irrigation space, you know, Jain Irrigation is one of the larger players. I think in terms of top line visibility, you know, they have a very solid order book of more than 4,000 odd crores. And I think this budget has clearly positioned, you know, the rural thrust very clearly. Our sense is that, you know, this stock had actually run up before the budget on hopes that some more benefits could come in. But if you see the structure of the business, even before the budget came in, the management was quite confident that debt reduction, working capital management, better working capital management would definitely be the core, you know, focus areas. And I think that is going to be seen in the next 2 to 3 quarters. Already we are seeing working capital cycle getting reduced. And most importantly, you know, whatever budget allocations have been made, our sense is that these benefits are going to be felt by the company, not in the immediate short term, but over the medium to long term. This is going to be a focus thrust area by the government going forward also. And looking at the kind of, you know, value unlocking which the management has also been mentioning, that their agro processing unit also is likely to go public. So probably valuations for that business is going to be also factored in this stock valuation at some point of time. I would believe that, you know, within the agro space, this is definitely a stock which has been beaten down quite badly now at around 110, 12 odd levels. So clearly from an earnings point of view and from the fact that the rural story is yet to pick up and this would be a focus area, this could definitely be a good kind of positional kind of call over the next 12-18 months. Rather than giving targets, I think, you know, at least a 30 to 40% comfortable upside even from the current level looks possible. Okay,
I have a few quick questions on Jain Irrigation. First of all, valuation wise, how is it placed?
Valuation wise, you know, FY18 looks a little bit of fair to moderate, but if you talk about FY19, I would believe that, you know, for a stock like Jain Irrigation, I would not be surprised if you get a you know, valuation of at least about 13 to 14 odd times. So clearly I think, you know, probably, you know, the stock had run up from 85 or 86 odd levels to 150 odd levels. We are looking from the correction point of view, this is definitely a stock which may not see a further correction from the current level. So clearly from a 12 to 18 month horizon, Darshan, this looks attractive.
Okay, and one quick question on their agro business. A potential, they have said that they would probably want to demerge it. How big of a value unlocking can that be?
Clearly, I think, you know, in terms of value unlocking, I would not be having a clear number to it, but I believe they are the largest player in the agro processing business, and dehydration products which they actually pioneered. This is one area which actually enjoys very high EBITDA margins. So I think clearly, you know, once we get a better clear idea on the numbers, but I think anywhere between say 1,000 to 1,500 crores is something what, you know, the ballpark valuation could be.
Okay, so that's the view that's coming in on the picks. Avinash is selecting Jain Irrigation, while Shahina has recommended Havells. Thank you so much, Avinash and Shahina, for joining me on the show. Before we end the show, we have some details that's coming in from the Auto Expo show. The consumer preferences EV policy are the factors to consider when it comes down to planning for electric vehicles in the country. That's the word coming in from Senior Vice President for Marketing and Sales at Honda Cars, Gyaneshwar Sen. In a chat with Bloomberg Quint's Krishanu Mukherjee, he says that the lower GST on EVs is not enough to attract a consumer from a normal IC engine car. Let's listen in.
We have all the technologies, and in fact we also have on display the Clarity fuel cell vehicle here. So the technology is not the challenge really. As far as India is concerned, we are working on a India strategy at the moment, and we are not in a position as yet to share any details because it's still work in progress. So there are several elements that need to be considered. One is of course consumer preferences, because finally the consumer is going to buy the EV. However, we have to align ourselves with the EV policy of India, and that is still awaited. So once all the elements are in place, that is where we can really take forward the strategy. So our strategy would depend on not just consumer preferences but the policy as well. So and that is still awaited, and that's why we are not in a position to share anything. So we have not yet concretized anything. We are working on the strategy, and once we have everything in place, that's when we can share with you.
Right, I'm going to pick from that word that you used, consumer preference. Now, normally when it comes to cars or when it comes to any commodity, the consumers drive demand, the consumers drive innovation, demand drives innovation. But here we're seeing something very different. It's being driven from the government's point of view. Now, of course, environmental concerns being given as they are. But do you think that the Indian masses, say over the next 4 years, 5 years, would be ready to accept electric vehicles in the form as they are today, where the kilometer readings on one charge is low, the costs are high? How long is it going to take for R&D to go into these areas to make it actually affordable for the Aam Aadmi, if we were to call it, in India?
Right. So the main constraint that the industry faces today is battery technology. Of course, it's improving rapidly, yet we are not in a situation where the battery is light enough and cheap enough to be really viable from a consumer perspective. That's one part of it. So we hope that's going to increase. Again, on the other hand, we have taxes, right? Of course, GST on EVs are lower, but is it enough to swing a customer from a normal IC engine car to an EV? That's not yet the case, because given the current tax structures, EVs would require far more support for consumers to seriously consider. And then there are other challenges which you yourself spoke about, range, life, etc. And then again, from an environmental perspective, we still don't have a clear picture on how old lithium-ion batteries would be disposed of, because that again is a big issue.
Okay, with that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg.